Broadcast is now starting. All attendees are in listen-only mode.
Hello, everybody. Traders, welcome to the Office Hours webinar. Today is March 9th, and welcome. And wow, what a day it was in the markets. You got myself, Jamie Hodge, and Steve Gomez is riding shotgun. What's up over there, Steve?
Not much up today, mostly down.
Yes, a plethora of down trades today, which we'll be taking a look at quite a few of them. Scott is usually our host today, but I think he's got something going on today, so we just wanted to go ahead and get started here, not keep you guys waiting. He might join us, he might not. We'll just have to see. So today's March 9th. Let's get going here. And before we do that, just got to take a minute to make the lawyers sleep a little easier. Obviously, we're all big boys and girls here, but please don't take what we dispense in as far as information in these webinars as investment advice. Everything we share with you guys in this webinar or any of the other ones that we do throughout the week, strictly for educational purposes only. If you do need investment advice, please seek out a registered investment advisor or somebody like a Series 7 licensed stockbroker that can legally dispense, buy and sell information to you, or investment type information. I think everybody gets what I mean there. All right, so moving right along here, it's always like to take a little bit of time at the top of the hour. Scott usually runs the polls to see who might be new, who might be a subscriber, so forth and so on. But I'm assuming that there are probably a number of non-subscribers in the room, so we always like to take a little bit of time here to let you know about the community that we fostered around the technology that is TI Pro. As you can see right here in the upper left-hand corner, Barry's Trading Room, a cornerstone of our community, hosted by Barry Anderson. He opens up the doors 30 minutes before every open and does a fantastic job at showcasing his trading style and the way he uses TI technology, and is very helpful to new people as well. And, could be 300, 400, 500 people in the room on any given day. So if you haven't been taking advantage of that resource, probably a good idea to do that. You don't even have to be a subscriber, an active subscriber, to get in there and experience the community. And one of the best things about it, other than Barry, is the price tag of 0 on the trading room. And if you've shopped around the web for trading rooms, most of them worth their salt are not free, but ours is. It's one of the benefits that you get in the TI community. As far as the 5 p.m. Eastern webinars go, you got myself and Steve on Mondays. Steve's going to take the helm for the Trade of the Week tomorrow, and Andy is usually his co-pilot. Wednesday rolls around. We like to change it up just a little bit. We bring in Dan Merkin, our CEO and founder, along with Brad Williams, our Chief Technical Officer. And then Andy's going to round out the 5 p.m. Eastern webinars on Thursday with the trading studio, and I ride shotgun with him. Now, we used to do Fridays a little bit different, but we've revamped our TI University schedule and also included Friday as well, whereas Friday used to start at 12 p.m. Eastern, and we'd take it 2 or 3 hours. Now what we're doing, and I guess I'll just go ahead and punch onto this next slide here because this kind of lays it all out here. TI University has been more or less retired and moved to our YouTube channel. And those episodes are still available, 101, 201, 301, and 401. But the content always remains the same. So anytime you want to go review that information, it's on our YouTube channel now. And we've replaced TI University with a daily live class. Okay, these go Monday through Friday. They start off at 12 p.m. Eastern, 9 a.m. Pacific Standard Time, and we take them for a full hour. And you get a different host in there each and every day. So thus far, we've experienced very good reception. Crowds are bigger. So in other words, it's a lot more conducive environment to get anything that you're curious about, whether it be simple strategy fabrication or help configuring something, or what does this do, what does that do? Anything TI related is on topic there. So if you bookmark this link down here, tradeideas.com live, and just bookmark it, it's the same bat time, same bat channel each and every day there. All right, just get a little bit of drink of water here and we'll proceed. Always like to show everybody how our subscriber growth has increased and is still increasing, correlated with the introduction of our AI modules, first making the scene back in the very beginning of 2016. And you can see the progression here. I think Scott's probably going to add the 2019 bar pretty soon. And in addition to the AI release, the release of our Brokerage Plus module, which allows you to basically trade through our platform if you have an account at Interactive Brokers. All right. As you can see here, demo orders are in orange and blue orders are live orders filled. And last time I checked, Steve, I think we're on pace to have a record month as far as live executions go this month. Of course, that's no big surprise with the volatility that we've been experiencing here. So all in all, people like Brokerage Plus, people are using it, and the tickets just keep on going up. And of course, we feel that it's a little bit more intuitive of an interface than the Trader Workstation because we've put our own features in there, give you the ability to auto trade the AI if that's the route that you like to go. And of course, we are working diligently to get our first connection to a zero commission broker dealer. And hopefully, if we keep our fingers crossed, we might be seeing that hit the developmental version. Maybe the next 30 to 60 days. We'll see what happens. But of course, as soon as we get it, we'll be showing it off to you guys as well. All right, so getting on over to today's class. Well, market in general kind of steals the spotlight here. We had a limit down occurrence overnight and this morning as well. Oil is getting pummeled as well, and of course the ongoing coronavirus fears kind of doing things to this market that we haven't seen in a very long time. So Steve, if you're ready to take it and talk about some of the tracking ETFs and the crazy action that's been going on here, I will kick it on over to you.
All right. All right. First observation, I was sitting over here kind of chuckling to myself, and it's always interesting. It's always fun, interesting, fun, pick your word. Fascinating to see the markets go down on green candles. I mean, so many gap down, so many horrific overnight gap downs just to be traded back up in the regular session. Overnight weekend gap down, just a smidge of green there. But that's not the story. I mean, the story is this is one absolutely broken market. I mean, if I could put this into a visual, it'd be like basically, a 350-pound wrestler, picked up a little weakling and just body slammed him. And as he bounced off the dirt, he body slammed him again, right there at the old predictive. If you listen to me all the time, you're not surprised. That 10-period moving average was the guiding hand that threw the price back down. If you were in my webinar last Tuesday, we talked about prices bouncing up into the pocket. And the pocket did exactly what I talked about in last week's webinar, meaning it becomes a level of resistance where a vicious bounce, you get some really vicious bounces in corrective markets and bear markets, some intraday rallies, big green candles, but they usually seem to stop right at the declining moving average, the 10-period. And again, that is just my way of gauging momentum. So the momentum is definitely down. The pocket was hit 3 or 4 days ago and threw us down pretty hard, pretty good body slam. But again, goofy candles in the S&PY here, gapping down on the day and trading back up at the end of the day, and then gapping down, trading up. But what looks, yeah, I saw that, Liz. I was going to see here. Liz is pointing out the most recent news to come through here. Now all of Italy is now being quarantined. We'll put post-market in here. I don't think it's reacting too bad for the moment, but it's just another nail in the coffin, so to speak, for what this market is likely selling off on. You guys heard me say a lot of times in the past, if you're waiting for the black swan to show up, that's no way to play the market. And I made that as a joke often, but the black swan showed up, and this is what a black swan looks like, guys. Who would have thought that, back here, as the market just kept rallying to highs, we'd be talking about some crazy coronavirus. But at the time, as the market was making newer highs, the RSI was kind of making lower lows, and we talked about that being a negative divergence, bearish divergence, which did in fact materialize. So what are we looking at here? We're looking at a horrible break of the 200-day moving average. And I'll tell you the thing that was most disappointing to me today was literally this this giant wick right there on the upside. We gapped down, as I said. We had a chance to play reversal today, and we had a moment in time where the candles were back above that declining moving average, but it wasn't long before they just kind of wallowed back in their misery and closed really ugly for the day and kind of an upside down. I used to call it the rainbow of death. That's not what you want to see on a downside. So there very well could be more downside movement. Let's look over at the Qs. The Qs did something interesting today. They came right up and tested that 200-day moving average intraday and then sold off. They couldn't reclaim. If we could have if we could have closed and held above that 200-day moving average, that might have been a little feather in the cap for the bulls today. But no, we got a nice, ugly topping tail there. Let me get rid of my crosshairs. There we go. Big, ugly topping tail there in that today's candle. Ugly in the NASDAQ. So this is where we got to start zooming out and looking left and saying, geez, are these the levels down here what we might be looking at? Because that was a pretty strong level. And now that we look at it here with a pretty weak close and a bunch of giant volume to complement it, this level down here might be coming into play sooner rather than later in the NASDAQ, in the Qs. Let's see what the S&P looks like in the same respective way. We actually already kind of took that level out in the S&P, and all we have left really, ooh boy, is what we kind of closed off of today. Look at that, we bounced off today. We bounced off this level back here. Where am I? This level back here from March of last year. This level back here from June of last year. Look at that. We're talking March and June of last year in a period of like 14 trading days. It's amazing how much you can give back when fear takes the helm. But what I'm seeing here, and I'm sure it might be something that people are looking at, is, boy, it was real close. The lows of today were very close to those lows going back there in the NASDAQ, I'm sorry, in the S&P, which kind of makes it obvious. As I just said, the Qs could have a bit more drop to go. We do have a small gap to fill there, but I don't really see that as significant. There still may be some more meat on the bone to the downside in those Qs. Dow, another horrible close with a red candle and a big topping tail as well. Just really ugly. Took out its respective lows today from back here. And then the ugliest of all is going to be, as we've always pointed out, the IWM, the Russell 2000. The small cap stocks just never really got it in gear. They never went to all-time highs as the other indexes did. And now as we roll over, they are leading us lower to the downside. So I don't see a whole lot out there to jump in and try and be a hero at these levels. There's something to be said for trying to maybe nibble on a few things during the day, especially when you see like the S&P and hit those interesting levels from before. But it all really comes down to the close. What's going to happen in the final 30 minutes? What's the real intention of the market that usually shows up in the final 30 minutes? And we are now even a bit lower than the close. And as Liz does point out, that could be some of the focus in the news tonight, in the futures tonight, as the futures probably gap down again on us tomorrow and we trade from there. Yeah, I'm going to let Mike see us. Certainly we'll let Jamie talk about AIM. Other than the fact that if he doesn't touch on it, I will when you bring up a stock like AIM. When we get the new version coming out of our Trade Ideas beta, we have this similar tab here. If we touch on the similar tab, we bring up AIM, we can see that this was pharmaceutical preparation manufacturing. This is probably test kits for the coronavirus and stuff like that. Bunch of news in there. And so you can come to this cool new tab called the similar and start finding, well, what are the other stocks in this space? Look at that one, had a big day as well. So cool new feature coming in the similar tab when we have a news related event, a black swan like we do now regarding virus and protective gear, therapeutic gear, testing equipment, testing kits. Those stocks will kind of all show up together on the similar tab. Just like if I was to type in AMD here, all the similar tabs are going to basically be semiconductor stocks. So that's kind of a cool thing coming. Mike C will look, I will let Jamie take it from there. Just lastly, the treasuries were just blown out. I've never seen the treasuries trade so high, but that's where the money has been going recently into T-bill into bonds, for lack of a better explanation there. So crazy day. Jamie and I and Andy and Sean, we've seen it before. We've seen just about all different types of market scenarios. Having started trading in the late or mid 90s, we've seen pretty much everything come and go. And it might have been a very new scenario for newer traders of what's happened here in the last few days. Because let's face it, people that started trading 8 years ago really haven't seen anything like this. So welcome. And all we can do is just try to adjust our share size and keep it small and keep nimble. That's one of the reasons I mentioned going to cash 2 weeks ago in the trade of the week. We saw some of those rumblings in the technicals of the market stalling out up there, but all it needed was something to associate itself with, and now we certainly got that with this coronavirus. That's all I got, Jamie. Maybe we'll have some better stuff to talk about next time.
Yes, thank you very much, Steve. I mean, it's just unprecedented, what we've seen just, in this number of trading days, we go from this all-time highs, everybody's happy, money's flowing in, and boy, how quickly things can change. If I expand this out a little bit, Steve, it seems like, remember when we had this first down day, we're all trying to, figure out where we might stop, get a little support, and then of course, my blue line, you can't see that well here, but that's my 200-day moving average. And we all just kind of looked at each other and went, yeah, it seems like that 200 period moving average is a foregone conclusion. And, regarding what you were saying earlier about additional downside, if I just kind of come over here and change my time frame up to, say, the weekly, well, I kind of feel like we're reliving that, but in weeks, because we had the week here, the kind of the not quite doji-ish week there, and here we're in the beginning of a new week, and look what's looming right below us here. That's the 200-week moving average, okay? Also, if we go ahead and look at the monthly, well, we got the same scenario, but it's the 50 period. Just kind of looking the same way as that daily did before
Like
that transpired. So just, no, I'm not saying I think that's what's going to happen. It's just the interesting correlation on the different time frames when we, back out significantly. So just some levels to keep an eye on there as we move forward. All right, on with the show. So, myself, Steve, Andy, Michael, we've all been doing our trading as well. And, we've all been of the consensus that, in markets like this, a lot of the times before you can process a lot of different signals, I mean, the moves have already happened, which reminds me of an old saying that missed opportunity or missed money is a lot better than lost money. And it's real easy to get out of whack in a market of this nature, which is why you'll hear everybody say, you know what, cut your size in half, double your stops. That's always good advice in a market of this nature, just because the vacillations can be so quick and brutal. If you don't cut the size in half and double the stops, I mean, you'll just get jerked around and stopped out, or as Andy likes to say, penny whipped, which even happened, a couple times today, but that's just the nature of the beast. So when it comes to things to look for, all right, look at old-fashioned simple things. They're going to be here in this market just like they are in quote unquote the regular market. It's just about being patient and waiting for them. Now, I would put up my CC readings, my compare count window readings this morning, but as everybody knows, we had a little, halt in trading, and that kind of skewed the numbers there. But my thoughts, and by the way, if I just pull the window that I typically watch over here, I think we were about 52% downside. So we were at 52% red versus 48% green in my little window that I like to look at about 15 minutes after the open. And my theory as of late, that's not that big of a bias, but in this market, it basically means downside action. And that's what it's been holding up as over the past week, and did the same today. So not massive counts to the downside, but no good upside counts either. Once again, numbers were kind of skewed because of the halt. However, played out just like I thought it would. I'm thinking, well, first move's going to be up, get about halfway up to the gap fill, which is exactly where we went to today before we rolled over, as Steve already illustrated here. So the majority of the action was to the downside today. Having said that, we were all a little apprehensive about how Holly, the AI, might perform in a market of this nature. But all in all, after everything was said and done, can't be too displeased. If we look at the channel bar over here on the left, we can see Holly AI 1.0 and 2.0 ended up finishing in conservative mode for flats basically, whereas Neo did the same thing. And of course, earlier in the day, these risk modes were fluxing, aggressive, moderate, but in the end, the best numbers were yielded by conservative. No big surprise there. So let's take a look at the 5 signals that Holly spit out today, because we did have a duplicate trade in here on DDOG. This happens from time to time. You can see right here, it came from 2 different modules. So basically Holly 2.0 and Holly Grail were optimized with the same downward dog strategy. We were chuckling about this earlier because downward dog, the strategy, spits out one trade called DDOG. I mean, what are the odds of that? It was not planned. This was completely random that downward dog spit out the short DDOG, which you could easily say that means downward dog. I mean, strange but true. Now, look at the trade here. We had a nice short signal here, and getting back to the term penny whipped on the stop, we can see right here, and I tell you what, let me get in the habit, right up here. We got penny whipped out of the stop there by what appears to be maybe 7 or 8 cents. Just barely tickled that stop line right there. But nonetheless, that was a stop hit, which brings to my attention what I wanted to show you guys about second entries, because this is textbook second entry type activity, which not only does this happen to the AI, it happens to us as well. We'll get stopped out only to see a stock roll over, in this case on a short, and work perfectly. Same thing with a long. We get stopped out by a few pennies and then it goes our way. Our chief information officer here at the firm, who does a lot of our coding, Dave Mabe, you can follow him on Twitter. He also has a blog that he publishes too. But he has several articles on this and why it's not necessarily a bad thing, even though it does result in a losing trade, but how overall it's a good thing. Now, what I want to show you guys real quick here is through Brokerage Plus. I'm on the Holly AI module or strategies here. And if we right click, you can see that we can set our long and short trading instructions, but we can also set our short re-enter trading instructions, which basically set up just like our trading instructions, but the AI will hit it again when it comes down here and punches through that entry line again. So looking at this one right about, what time was that? Looks like 11:45 my time, 12:45 Eastern. Once this thing got stopped out and came down here and punched through the line again, it would have gotten you short again if you had your re-entry instructions, assuming you were auto trading Holly. And then we can see here, it worked. And you would have got to enjoy this move down, not suffering that second stop out there. So just keep that in mind, all of you with a Brokerage Plus license and the ability to auto trade Holly. Remember, you do have the option to make the AI re-enter a trade that has previously been stopped out. And so this was a really good example of that functionality and how it could pay dividends in the future. So just keep that in mind moving forward. Having said that, we could have easily monitored this on our own, right? Anytime we see Holly closing the trade out in a profit save, it's probably worth taking a look at. Now, this one's interesting because typically we've been in an up market. So we would see the AI either get stopped out first, right? And that would show up in the exit reason. Whereas DDOG today, the AI actually made a pretty decent call in closing the position out early. Even though it says profit save, it was a flat. And then it did avoid the stop out, but the stop out occurred after the initial early exit. And just to, kind of rehash the exit parameters there in conservative mode, we got a stop loss, a profit target, a timed hold, and then one of two audibles can be called to exit the position early. And that is what happened with D-Dog, even though it did go up to a stop out, which is why in moderate profit, we see the value remain at the stop. And then in aggressive mode, of course, at the close, where we came back up to the entry line. But if you're paying attention to your aggressive column throughout the day, then when it was down here, aggressive mode was nicely in the money, but things changed as we had the little run up and then the kind of run back down towards the close there. So just wanted to point that out with D-Dog, draw the correlation between a second entry, whether you're doing that manually or using Brokerage Plus to automate. And now let's get on to the big winner today. And out of a assortment of, well, we got 5 signals, but really just 4 since D-Dog was an exact duplicate. Boy, talk about a crazy good little trade here. And let me get rid of that markup there. What a buy call from Holly Neo today at 359 in the initial signal right there. And that was about 1, 2, 3, 4, about an hour right into the open there. Okay, so things just kind of doing its flat line dance there. AIM, AI calls it at 359, and then from the time that the AI called it there, 1, 2, 3, 4, 5, 6, for about another hour and a half, we just get sideways activity. Now, no early exit on this one. And, I was just discussing this with one of my trading buddies over the weekend, who's been, kind of going through some funk, and really what it all boiled down to is he's making really great calls, but he's not exercising good risk management. Okay, so I had a little talk with him over the weekend. Already today, he's like, man, all I had to do was dial in my risk management, and I actually made money today. But I was also telling him to look out for these signals on the AI, the ones that consolidate for a while, because that's not necessarily a bad thing. Just to refresh everybody's memory, this is a statistically weighted system, right? We have statistical probability on our side, and it's good when the signal comes out, but it's also good for the remainder of the day. So this one's set up perfectly from the time that the AI called it, just meandered along. Another cool thing to point out about this one is the way that it was hugging the 10-period SMA, the fast line, as Steve likes to call it right there, and acting as the guiding hand. And then slowly but surely, what happens? We get back up through the entry signal, and then you can see the line that I've drawn right here, which is a nice, crispy, clean range break, which is what I like to call the auxiliary pattern playing out on top of this statistically viable AI signal that we got back here. So if you're in it right here, great. This is where it had liftoff. This is also the secondary, pattern right there is also a great time to bolster that position, to add to that position. So maybe you ran 100, couple hundred shares here. It was a $3.50 stock. In 200 back there, maybe you add 100 or 200 here, and then you get the majority of the move. All right, so this little guy went from 359, topped out at a high of 711. Not quite a doubler at the highs, but pretty darn close. And in a market like this, man, what a great long play. As Steve was pointing out, soon to be released to you guys, the similar tab is going to show us all of the other stocks in this type of sector, right? Quick sector rehash there. So as Steve was saying, I never really even dug into what this company does. It's something in the immunotech world, pharmacy, as Steve was saying, test kits, things of that nature. Holly, the AI in general, has been all over these stocks over the past week and done quite well with some of these plays. So we'll see if it continues for the remainder of the week. But if it does, and you see another small dollar stock and you pull this up and you're like, testing or, biotech, well, that should be a good tell that, yeah, even if we're going down again tomorrow, those are some stocks that might have a pretty good chance at upside potential. All right, just checking out the questions panel here since we're a little short-handed here, but looks like everybody is chilling out. Okay. 11th anniversary of a low of 2009. Yes, that is correct, Liz. Okay, so anything else to cover with Holly here? Other than that, we just had, a little bit of profit potential here, but once again, just down to the stop out on INSW. I mean, right down exactly to it. Not even a penny whip, but just an exact honing in on the stop loss. LPTH, nothing to write home about either. A little bit of profit potential in this one, up to $1.83 from the $1.55 level before it pulled back and just ebbed and flowed right around that entry line, but no stop out on that one. All right, and that's it, pretty much it for Holly. On a day like today, only kicking out 4 signals, or 5, but one was a duplicate. We'll take that and we'll see what Holly offers up tomorrow. All right, so getting back to the tickers that I always use, they don't change their spots. They're there all the time. It's just that the turbo breaks down today and its counterpart, the turbo down, no resistance. I mean, there were so many of these plays today, I didn't even bother to list them there. I've got some queued up on my other screen that I'll pull over here and show you. But it was like clockwork, okay? Just waiting and waiting, seeing what comes through, seeing if the pattern is intact, and then making a decision. And like I said, these guys were all over the place today. So first and foremost, let's talk about the ones that were coming through the turbo down family no support. And I will say this about turbo up family no resistance, very strange, because didn't see anything come through this ticker all day. This guy came through about an hour and a half before the close, but look at it, you wouldn't even want to attempt to trade that thing. It's just a bunch of dashes. ZTO came through in the last 30 minutes. It didn't seem to care about the down market today, which surprisingly, I do believe it is a Chinese company, which is a little interesting there. But for the most part, this window was completely blank for the day, but not the case with this guy right here. This guy was pumping them out left and right. It's almost like the opposite has now become true. This is the active window. This one is the one that's pretty much dead, whereas this one used to be dead. I got to pull up OVV just because, I almost shorted this one back when it broke this low not too long ago. For some reason, I did not. I wish I had of, but look, this thing is cascaded all the way down from 15 and went down to 275 today, ladies and gentlemen. I mean, things are literally falling off cliffs. Now, this one, NTB, because we can look over here and I got to tell you, shorting things based on the daily when we've broken these levels and we're just cascading down, you're like, oh man, how can I short even here or here? I mean, things just look so ominous, right? And that's when we have to go to the intraday to go, okay, even though we've been just cascading down for over, 1, 2, 3, 4, 5, 6, 7, 8, 10, 11 days, right? It's too scary to assess risk here. But we can do it over here on the intraday 15-minute. We see something like this play out, okay? A little scary over here, but hey, we pull this guy up. It's just now cracking this level right here, easily definable. We have the added benefit of no support, right? So we can take a very small risk up to the 2388 level, shorting the 2350-ish, 2347 level right here. So this is our risk level, and this is how this thing worked pretty much all day. There weren't a whole lot of things to worry about. Once you identified this level here, it took a little bounce up, sellers took it back down, cracked that level right there, and then it was just the staircase of profitability there. Looks like a staircase here, looks like an elevator here, but hey, nonetheless, it was a low risk trade that worked for most of the day, and we can give ourselves assurance and not freak out about it because of the low risk that we're seeing right here. So not including the entry bar, which is right here, we just if we can stomach the high of the prior 15-minute candle, even if you were using 5-minute candles here, you just count back 3, not including the entry candle, and assess your risk. And, we could pack that risk area many times into the reward area right here. So that was a really good one that came out of the Turbo family down, no support. Once again, both of these windows, as well as my other two windows, which we'll take a look at the ones that came out of here in a minute as well, can all be found on channel 4. For your viewing pleasure, all you have to do is scroll down here, click on channel 4, and you'll see not only my favorite windows, but Andy's, Steve's, and Sean's as well. All right, so not a bad play in NTB. We also had GPP coming through the same window here. Let me get rid of that markup. And we've got more of the same. Now this one took a little bit bigger of a bounce up initially, coming up to these levels here, but slowly made its way back down. And then, boy, it really went to sleep. There's 1, 2, 3, 4, 5 15-minute bars that really got tight. So once again, entry candle here, not including the entry candle, that prior 15-minute candle. I mean, the risk is so small that I couldn't even really write risk in there. But these are the types of plays that are going to give you some peace of mind going, you know what, I'll gladly short it right here and use this level. It either works or it doesn't. If it stops me out, it's not going to be too big. And of course, looking back over here at the intraday, once again, scary over here. But if things make sense on the intraday leading up to this break right here, then it gives us the confidence to take the trade. We got low risk. Once again, we could fit this risk area many times into the reward area. This one taking a little bit of a pop towards the close there. But once again, what do we have here? Well below that 10 period all day, just like we had on the GPP. Not even acting remotely like it's going to go up there and close above that 10 period fast line. All right, see a question pop in there. RJ's asking, are the turbo screens included in the default screens? Well, once again, all you have to do is cruise down here to channel 4. Click on channel 4. You'll see all of mine, Steve, Andy, and Sean's favorite windows. You'll see turbo down, family no support, the up, family no resistance, as well as these other versions, which are not looking at the long-term support or resistance, but just the intraday setups. So two really good ones coming through the no resistance level. I think BMA was not one of those. Yeah, BMA, same thing. I just had it in the wrong spot. Let me see here. Nope, we're not there yet. So BMA was found using these guys. Okay, and the underpinnings of these windows are basically the same as the versions over here. It's just we have the added caveat of these with the no support, they have to be hitting all-time lows, and these guys have to be hitting all-time highs. So when we look to the left, we see no identifiable support or resistance. A little bit different on these guys because we'll be able to identify how much room they might have looking at the daily. But the setup is going to be the same on the intraday. You know, if I look at BMA here, we're getting close on this guy. You know, I'm squishing my daily up. Even if we looked at the weekly, let's just take a look here, make sure we're seeing everything. You know, we still got a ways to go before this guy hits all-time lows. Now, if it gets past this area right here, well, then it might release into the next little tranche there. But the bottom line is this: on a day like today, where there's a heavy sell hand in place, a lot of these levels get filled on the daily. And once again, we've got a nice consolidation area leading up to this range break here, where we have the blue arrow where the entry was made. Looking back here at the prior 15-minute candle, I don't know how my line got out of whack there, but actually it should be about right there. So once again, we've got a nice low risk area. And ladies and gentlemen, most of these had accompanying really good relative volume. Let's go backtrack. GPP kicking almost 9 as this break was occurring. NTB almost 3. So far BMA is the least, but still finishing at a 2 relative volume metric there, which is pretty strong, and it's always what we like to see when these patterns are emerging right here. So once again, just a nice downturn, being able to identify the break there. Nice simple pattern. Once again, the risk can fit many times into the reward area there. AIG, American International. And, keep in mind what we're seeing here, it just looks like a carbon copy. This one took a nice little, bounce up at the close, but once again, a very small risk area. We had reward all the way down to this level here. Nice entry candle here, risk at the top of the prior 15-minute candle, more of the same. Only difference is this one got a few buyers in it towards the close, but a nice downturn there and a nice risk to reward ratio on AIG as well. Wix, this guy was really good as well. Once again, tiny risk areas there. Prior 15-minute candle is what we want to assess as far as risk goes, not the entry candle. Once again, over and over again, we're seeing these things come through, and it was just about catching them at the right time. Obviously, if we saw it coming through here, the sweet spot is already passed. We want to get them just as they breach these levels here. If we are eating a sandwich or fielding a phone call, we miss it. Hour later, we look here, the sweet spot is already passed. But just by timing these things and only picking the ones that look very conducive, such as what you see right here, you can get into some very tight risk and get some very juicy reward here. Once again, the 10 period doing its thing for most of the session until we get the little bounce there towards the close. Zion, another one. All right. This one kind of wedging a little bit more than the others, but nonetheless, I like how it comes back down here. The bars get really small, and we got to include that wick on that opening candle there. So right here is where that level was busted. Just a slow little wedge down into it. Really tiny risk. It's been a long time since I've seen a lot of these line up where the risk was so small, but that's the nature of the market today. To the downside, pretty much hi-ho silver. These were just all over the place today with minimal risk and excellent follow through. Once again, the 10 period doing its job on Zion as well. And then lastly, AYX, more of the exact same here. Just a nice consolidation area, boom. And let's see, 1, 2, 3, 4, 5, 6, 7 of these that I'm just showing you guys, but there was probably 10 or more, 10 times. There were probably 70 of these setups today, or potentially more than likely even more, that looked all just like this, okay? But they didn't all break at the same time. Some were 15 minutes later than others, some were 30 minutes earlier, so forth and so on. But a lot of these things did exhibit extremely low risk entries, such as this guy right here in our reward area. Once again, much larger than the risk area. All right, so even on an ominous day like today, we're seeing a lot of no sweat trades. And what do I mean by no sweat? Well, once we made the entry, we were never really out of the money, which is typically a mainstay in regular trading. It's always good when they go our way initially, but more times than not, we're having to sit a little bit of a wiggle. But boy, not today, not in these types of setups, and they were just there non-stop. So once again, it's all about perusing these tickers as you're seeing things hit, well, today new lows, and seeing if the pattern is intact and seeing if the timing is intact. And not to mention, a lot of these guys would set up multiple times throughout the day as the day progressed. We got another little setup here as we, well, let me just move that line up there. Not the best example today, but still another setup and a release lower. Now, if we go back and look at all the other ones, a lot of those were just a stair step down, so they never did flat line out and give you another opportunity for entry. But when you have a trade working, like this, who cares, right? It's just doing exactly what we hoped it would do. So, hey, the market might have turned. Maybe this is the beginning of a bear market. Maybe it's just a correction and we're going to be back at all-time highs before too long. But what you're seeing in these downside plays is the exact mirror of what we were seeing before the market turned like this. It's just that there appears to be so many more of them because of the large moves that are occurring, going up on the staircase. And of course, I'm not even on dailies there. I was like, why does that look so weird? But a lot more downside, a lot more volatility, we go up on the staircase, we go down on the elevator. So it's just throwing a lot more opportunity at us than we're used to seeing. So just keep that in mind as you move forward. We'll have to watch the futures tonight and see what they're going to dictate. You know, I would like to see the market bounce, but if we have another day like today and these patterns are as prevalent as they were today, I won't complain about that, because I can assess my risk on the intraday, even though things look a little bit disastrous on the daily, but still find some low risk trades that are going with the flow of the market, and they're relatively simple patterns to embrace with minimal risk. So I hope that makes sense to everybody. I think that's just about all I got today. We're finishing up a little bit early because Scott wasn't here in the beginning to run his metrics and whatnot. So Steve, unless you have anything to add.
Just on the last thing that you just said, I would love to see an intraday flush, an intraday market low and an intraday reversal off that low, closing at highs. That would be a nice thing to see rather than these gap down, indecisive type close. If we can get a nice washout V bottom on a 15-minute chart where it's down in the morning and up in the afternoon and a big tail on the daily chart, I would love to lean on something like that and think that that might be the worst of it once we have that.
Yeah, and a nice flush out and a nice rebound. I mean, is it going to happen here? Maybe, maybe not. It was really odd to see the lock limit down because we haven't seen that since what, Brexit, right?
That's what I was told, yeah.
Uh-huh. But we had it today, and who knows? I mean, big gap down today. So maybe we'll see another one tomorrow, maybe not. Maybe, you know, some of our friends on YouTube, as well as us, we always complain about this because, a lot of the steam, a lot of the juice gets taken out in the gap, and then we have this type of activity. Whereas, you can't really participate in this unless you're willing to, kind of take a 50-50 bet on, are we going to gap up or gap down? So maybe we won't see as big of a gap down tomorrow, and maybe we'll get to participate more of the move, or it might just be another big gap down. But in any case, we've all got front row seats. So we'll see what happens. Be nimble out there tomorrow. As we were talking about earlier, it might be a good idea to cut your size in half and double your stops just to endure the volatility, unless you're finding really tight things like what I was just illustrating. When you're seeing these types of patterns and you can take such small risk and the momentum is with you, well then yeah, you can keep your regular size. But anything that you take a second pause on, then you probably already cut your size in half and double your stops. And that is the trading advice for me today, Steve. All right. Want to thank everybody for popping in. Be nimble out there tomorrow, and we will see you in the trenches. Take care, everybody.
See you next time. See you tomorrow.